That sort of monetary policy hedge is where its store of value or wealth preservation aspirations come from.
And now what we're going to do with Bitcoin and then all of the other coins we'll analyze is just be honest with the audience. Let's talk about some potential pros and potential cons. What are some good things? What are some potential bad things about each coin? And we'll start with Bitcoin.
Yeah, let's start with the good stuff here. So we'll
Yeah.
start with some potential pros. And, there's a bunch of other potential pros other than what we have listed here, such as its decentralization, transparency, its borderless nature, the promotion of financial sovereignty, and desirable properties of money. But here we're going to focus on and highlight some of the most cited potential pros of Bitcoin. And we'll start with security at the top. It's a very important concept and important aspect of Bitcoin. And that proof of work system that we were talking about earlier is very, advantageous to the security of the Bitcoin network. So that proof of work system and the global mining network make it extremely hard for any single entity to control or hack. So that is by design, and that is to make Bitcoin very secure and uphold that integrity of the underlying network. We also have a very strong brand and institutional adoption behind Bitcoin. Bitcoin is the first and largest cryptocurrency. It has that first mover advantage. It is widely recognized and it is increasingly being held by corporations, institutions, some universities, and even governments are holding it as a reserve asset. And then lastly here, again, we're gonna go back to the fixed supply component. So Bitcoin has that pre-programmed monetary policy. It has that hard supply cap of 21 million Bitcoin, which supporters believe make it a very strong hedge against inflation, or at least, more so than other cryptos might.
Bitcoin, of course, also has its critics. What do they say?
Yeah, I mean, similar to the pros, there are other potential cons that we might not, mention here, such as the technical complexity, especially for beginners, the price volatility that you mentioned earlier, Jim, transaction irreversibility, a bit of a feature and a bug, and the relatively limited adoption as a medium of exchange for everyday purchases. But again, for the purposes here, we're going to focus on some of the most commonly cited potential cons, which are it is slow and impractical for everyday use. So that proof of work system that, really secures it also makes transactions slow, which is about 10 minutes per block. So every 10 minutes on average, a batch of transactions get pooled together and added to the blockchain. And those are added about every 10 minutes on average. So it's not really ideal for daily purchases compared to faster networks due to that longer relative settlement time. It's also very energy intensive. So that proof of work network, consumes large amounts of electricity. And, while this is by design to ensure there is an upfront cost of production for miners to incentivize them to act honestly and acting in the best interests of securing the network and not cheating the system, it still raises environmental concerns despite the growing use of renewable energy. Another potential con here is that, Bitcoin is very simple and ossified in its design. So that simple design and its simple code is not as developer friendly and more impractical for building decentralized applications. Max kind of spoke about that being kind of a core value proposition or use case for Solana and Ethereum. Bitcoin comparatively is really not as developer friendly as those networks. And kind of going off of that is the scalability trade-off. So Bitcoin prioritizes security and decentralization over speed and scalability, which does make it more difficult to scale over time, particularly as adoption grows. And so there is this core concept in the blockchain community called the blockchain trilemma, where a blockchain can prioritize functionality for speed and scalability, security, and decentralization. And while it can attain two of these features, obtaining all three can be incredibly challenging. And so Bitcoin was built to optimize security and decentralization at the expense of speed and scalability.
Got it. That wraps up our Bitcoin section. But before we move on, we do want to do a bit of a knowledge check. We like to have our live audience engage in a bit of a choose your own adventure experience here. Vote for A if you want the Max and Matt to talk a little bit more about Bitcoin's proof of work consensus mechanism. Vote for B if you want to talk more about Bitcoin's fixed supply, that 21 million supply cap. C is what Bitcoin is used for. And D is, I've had about enough of Bitcoin. Let's move on to talk about Ethereum. And by the way, there will be a winner, right? And regardless if your vote doesn't get talked about, just remember that fidelity.com/crypto is an amazing curated resource that we build all the time. We update all the time that's got answers to those topics and a whole lot more. Kelly, I'll look to you now to see if there is a clear winner on this particular poll.
Yeah, thanks, Jim. There is a clear winner. So it looks like the majority at about 60% is ready to move on to Ethereum.
Love it. Max and Matt did such a good job. It's time to talk about Ethereum. And we've got a trio of viewer questions that came in during registration that will guide the start of our ETH conversation. Daniel says, wants to know about Ethereum's future use cases. What's it going to be used for? Roger asks, why would the price of Ethereum rise if there's no limit on its production? And Gurpreet notes that, when he wrote the question at least, ETH has been outperforming Bitcoin as of late. What's behind the rise of ETH? So the real simple answer to any price question is it has to do with supply and demand, but there's a lot more behind what moves a crypto's price. So let's talk a little bit more about ETH specifically before we start talking about prices. And Max, I'll turn it back over to you for ETH.
Sure. Thank you, Jim. I guess just for some context, we can cover like the basic need to know, and then we can get into the nitty-gritty. A lot of good questions there. To get us started, ETH or Ethereum, the network was launched in 2015 as a project headed by Vitalik Buterin and others, and is now the second largest cryptocurrency by market cap. As I mentioned before, the blockchain is programmable so that the part or most of the value proposition is that it allows for developers to create applications that users then pay to use, right? So like and similar to what Matt mentioned, there's a difference between the asset and the network that's core for understanding how these networks work, and like what you're investing in is very important to understand that difference. Interestingly, as you'll see here, Ethereum actually started off as as using the proof of work consensus protocol, but then later changed to proof of stake in 2022 as they felt it fit their like use case a bit better. So to address Daniel's question directly, it can be difficult to say what the future use cases will be, but as of now, like what we've seen is like the most popular applications over the past year that users are paying for have been payments and trading related mostly. So since 2015, users as a whole have spent like over $20 billion in transaction fees for Ethereum's products and services, most of which again are payments related or trading financial assets. So, you could make some argument for Ethereum having a level of product market fit given like how much users have actually paid to use Ethereum and the applications that are on the network.
Let's do that pro and con thing again, if we could, Max, talking about, what people like about Ethereum and what they're maybe more critical of.
Sure. I can definitely get us started with the pros here. I would say the first one is developer focus, right? It is pretty easy to build on given the fact that Ethereum has been around for so long. There's a bunch of developer tooling, which might not mean much to you if you're not like technically focused or aligned, but it is generally, from what I hear, very easy to make applications or create like businesses that have products and services for users of Ethereum. So that is, I would say, where like relatively that Ethereum would shine. Something that was very popular when it came about in 2019 was the creation of a clear value accrual mechanism. This one I think is really interesting. I hope we get some questions on this later. But what I mean by like a clear value accrual mechanism is that there's this clear connection between the token or the Ether token and usage of the network. So each time you and I make a transaction, we pay a fee in ETH that gets burned. In other words, burn means that that fee actually gets removed from circulation. So this mechanism, in theory, means that like the more fees users pay to use the network, the scarcer the asset becomes. So that's that clear connection between the network and the asset. And then lastly, I think this one's interesting. Like a lot of Bitcoiners probably wouldn't list this as a pro, to be very honest, but I think like Vitalik and the Ethereum Foundation and all the stakeholders within the Ethereum community have made like a bunch of really good decisions over the past 10 years. And that's like why the community trusts them, with a lot of the research and analysis that goes into like framing the roadmap. So like in Bitcoin world, this might be a con. But in Ethereum world, this is like part of the value prop that Ethereum and a bunch of developers will like steer the ship
Mm.
in a way that's beneficial for the network and users.
And what don't people like? What are the criticisms of ETH?
Yeah, Jim, I mean everything comes with trade-offs, so you could like flip any of the pros and turn them into a con
Right.
essentially. Which I love, always a good conversation. I would say the number one thing that, I would say would be necessary on a list of cons is the fact that there's competition always arising, right? There's always new blockchain networks or applications being made that have some overlap with the products and services that are on Ethereum. So like this should always be on your list of like risks or cons, and it's typically in all of our papers that we cite to our institutional investors is that hey, new things are being built and there's a chance that like Ethereum loses market share to some of these newer networks. So that's definitely at the top of the list. Commonly over history, I've seen the inflationary concerns be like top of mind. Maybe we'll get some interesting questions on that. Critics often say that Ether doesn't make sense like as a store of value when they're comparing it to Bitcoin because you don't know exactly what the future, what the supply will be far into the future like you do with Bitcoin, right? So it doesn't have that fixed schedule. So that might take away from its store of value properties. And then lastly, as you see here, it's pretty related to the competition piece. It's just like newer networks are always coming up, and they're always faster, they're always cheaper. So, it's not the fastest, and that could and has actually contributed to some users preferring these other networks for that different types of transactions that they need to be faster, need to be cheaper. So on average, I would say ETH averages like 1 to 2 million transactions a day, which isn't going to be enough to facilitate every transaction in the world that we all do every day, right? So there is a bit of a give and take there.
All right, so that was a few minutes on ETH, but again, we're going to turn to the audience and see if there's anything they'd like some clarity on before we move on to our next topic. So head on over to the polls tab just to the right of the video player and let us know if you want to learn more about Ethereum's use cases. That's option A. Proof of stake explained in a bit more detail would be option B. Option C is learning more about how ETH tokens get burned. We only touched on that. We can talk a bit more about it. Or D, let us know if you want to head on over to Litecoin. I'm watching the votes come in. I'll vamp for just a second as people continue to vote and turn it over to Kelly. And looks like there's a clear winner again.
Yeah, clear winner again. I think we are ready to move on to the next section once again to Litecoin.
We will go on to Litecoin. Got a couple of registration questions there too. Sean, during registration, asked Bitcoin, Litecoin, etc. What's the difference? And Hillary asked, what about Litecoin? Is Litecoin worth it? It's a tough question because I don't know what you mean by worth it, Hillary, but I think we can give it a pretty good answer. Matt, talk about Litecoin, please.
Yeah, those are great, great two questions to start with. It's definitely a fun one there on the second. Is it worth it? We'll see, right? But Litecoin, the name actually, fun fact, derived from Bitcoin Lite. Litecoin was launched by the founder Charlie Lee in 2011. It was one of the first cryptocurrencies to be released to the public as an alternative to Bitcoin. So again, not as early as Bitcoin, but really there in a relative context in terms of one of those earliest alternatives there. But since Bitcoin was entirely open source, that code was open source, you could copy it, spin up your own blockchain, as Litecoin did. It was developed from that Bitcoin source code. Litecoin was really designed to be an inexpensive and quicker network for cryptocurrency payments. And so the Litecoin network can currently process and confirm transactions approximately 4 times faster than Bitcoin. So really they were focusing on, some of those, potential trade-offs that we looked at, some of those potential cons before. The speed and scalability component is what Litecoin was really, focused on improving with their network. However, on the other side, Litecoin does have a maximum circulating supply of 84 million tokens, so it has less scarcity than Bitcoin's 21 million. And the network does have a lower overall hash rate to safeguard its blockchain. Hash rate is really a measure of security. It's the total computational, energy dedicated to securing the network. So oftentimes we talk about hash rate being the overall proxy for security of the network. And with Litecoins being lower than Bitcoin, it is not as secure comparatively. But Litecoin does aim to be the complementary medium of exchange asset to Bitcoin's store of value properties, which is really why Litecoin has prioritized that speed and privacy and kind of scalability component over Bitcoin. And so we'll focus on that privacy portion real quick. That privacy feature is actually optional, but it hides the amounts and addresses of individual transactions. And so the Litecoin balance using these privacy features has increased by almost 50% according to a Litecoin blockchain explorer over the month of October. And so that's an interesting trend that we've recently seen, and a trend we're continuing to monitor closely.
And pros and cons.
Yeah, I mean, like Bitcoin and Ethereum, there are other potential pros of Litecoin outside of what we'll focus on here. They have those lower fees, they have that established history, they do have some deeper liquidity relative to other cryptocurrencies. But some of the potential pros we're really going to highlight here are the faster transactions. So that the Litecoin processes payments in about 2.5 minutes, making it quicker than Bitcoin's 10-minute average. So, pretty significant improvement in a relative context there. Bitcoin has that 10-minute block time. Litecoin has 2.5-minute block time. It also has enhanced or better privacy. So those additional privacy features do hide transaction details from the public. So really only the sender and receiver know the amounts. So if you're looking for maybe a little bit more of a private blockchain network, perhaps Litecoin, is advantageous for that. And then thirdly, Litecoin is very similar to Bitcoin. So Litecoin does use that same proof of work consensus mechanism and a halving mechanism where new supply gets cut in half every 4 years. So it does give a familiar structure for other crypto users.
That's super helpful context there. But I bet you can also predict my next question. What are some cons, potential cons?
Oh, I didn't see that coming. We have to be intellectually honest here and look at the potential cons. So, one of them is sort of what I mentioned before. It is less secure and more centralized. So that Litecoin speed does come from those easier cryptographic mining puzzles, which critics could say make it more vulnerable to attacks and lead to more centralization of mining power. Another potential con is the lower adoption and limited differentiation. So it is far less popular than Bitcoin from an adoption standpoint, and often does lose that battle to Bitcoin as a means of long-term wealth storage. So again, kind of going back to that kind of fun fact earlier, it is that Bitcoin Lite. It is seen as that lighter version of Bitcoin, but it doesn't necessarily have a unique value proposition by itself. It is a little bit faster, a little bit more scalable, but it's very similar to Bitcoin otherwise. And so that lower network effect compared to Bitcoin has resulted in a smaller developer and user community compared to, some of the other assets that we talked about today. Bitcoin, Ethereum, Solana, lower overall developer activity happening on the Litecoin network. And then kind of going off of that, thirdly here, is just tough competition. There are other cryptocurrency networks that are even faster than Litecoin. And, we're seeing increasing competition, what feels like every day, a new network could be spinning up. And so Litecoin, despite being one of the first in 2011, it really isn't the quickest option out there anymore. And we're seeing, increasing competition from new market entrants.
All right, back to the audience now to see what we're going to talk about next. Kelly, there's a winner again.
Yep, same tune again. So the majority, 80%, are good to move on to Solana.
All right, let's do what the people want to do. We're moving on to our last of the 4 cryptos that we're going to talk about today, Solana. Let's start with some questions that are very easily answered. We've been getting a lot of these for quite a while. Heidi wanted to know, when will Fidelity add other cryptos like Solana? Joshua says, when will we have the ability to purchase coins such as Solana? Taylor wanted to know, when will Fidelity users finally be able to buy Solana? Well, the answer, I hope, is very clear already. As of last month, as of October of 2025, yeah, you can buy Solana. You can trade Solana here through Fidelity Crypto. And you can learn more about how to get started and how to find more educational resources about Solana, in addition to what we're about to talk about, by heading over to fidelity.com/crypto. Again, we're quite proud of it, our highly curated, really robust educational space to help you get up to speed on all things related to both Fidelity Crypto, the account, as well as cryptocurrency education in general. Let's grab a question from Daniela when she registered. She said, so is Solana a new cryptocurrency? I don't quite get how it works. Max, tell Daniela and everybody about Solana, please.
Yeah, absolutely. To directly answer Daniela's great question, it is relatively new, right? It's been around for just 5 years, and I'll be honest, now I don't think not many people I've spoken to quite get how exactly it works either. So you're definitely not alone. If I were to simplify it, just being respectful of people's time here, is the entire technology stack of Solana is really focused or just optimized for speed, right? It's in that similar like mental model bucket of Ethereum, where the whole goal is to host applications that users use. Solana, again, they've tailored their whole network to just be as fast as possible because they have really a core goal of just like being the venue for trading all assets. That's the stated goal of the teams that support Solana. And it seems that that's what the users are coming to Solana to do. For example, Solana had an on-chain trading volume of $150 billion in October, whereas Ethereum had just about $100 billion. So that's kind of the best way to think about it, Solana as a trading venue. Importantly, if you don't get how it works now, things change regularly. So like that's a really important piece for any investor or folks on their learning journey. If you try to understand Solana and how it works today, it's going to look a lot different in just a year or two as they're consistently changing and upgrading the network.
Some pros and cons then, if you wouldn't mind.
Yeah, of course. Similar to the kind of the idea I was sharing, speed is the pro. It is a trade-off, of course, right? But a lot of folks see that as a clear benefit. Solana averaged about 68 million transactions per day over the past 6 months for little to no cost, right? A lot of these transactions cost around a penny. So that makes it much quicker and cheaper than Bitcoin, Ethereum, or Litecoin, right? Another pro, again, still a trade-off, but many people view the clear focus on trading as a pro because all of the developers are like just have this narrow focus and they're like everything they do is aligned around that one goal. And then lastly, they have a very fast-growing ecosystem when it comes to developer activity, stablecoin supply, active users, just the value being transacted, as I quoted earlier, very fast-growing ecosystem. Hard to find a trade-off there. And then on the con side, I guess the trade-off to like the narrow roadmap would be that it's more centralized, both in its governance, like there's a smaller team determining like what is done to the network next, as well as the speed. It requires really kind of beefy computers to run the transactions at such a high rate. So that's, I'd say, the most cited con here. Um, Similar to that is that it comes with outages. It's actually had several outages in the past, so some people do worry about its reliability. They typically have just lasted a couple hours, but it has kind of associated Solana with a bit of a stigma there around like unreliability. But the last outage was over 2 years ago, so it seems like they've taken that to heart and worked on that. And then lastly, again, Jim, as I mentioned, competition wouldn't be a con without it. It's a very innovative space. A lot of people are going after that trading venue type of investment thesis. So you would have to have it on here in terms of the list of risks.
Max, Matt, Kelly, thank you for your time today. And one final thank you to everybody joining us live for this live stream. Really appreciate your time. Just a final reminder to register for our next live stream. You can see the link on your screen right here. Thank you so much for taking time to be with us today. I'm Jim Armstrong. On behalf of everybody behind the scenes here, thank you again, and we hope to see you soon.